finalized our restructuring process. But then for S&P and Moody's, they've improved us. So last year, Moody's started last year, October. As you can see, last year, 2024,
yes,
Moody's upgraded Ghana from CA, which is they call it selective default, not exactly. So Moody's, moved us from selective default to CAA2, which is high risk, which is good news for us.
Yeah.
And as you can see from the graph, from 2012 till 2021, it was favorable rating from B1 to B2, and then we stayed at B3 for a long time. From
B3 from 2015 to 2021.
Exactly.
We've been quite stable in terms of our outlook. Okay.
And that's where we used to go to the Eurobond market and get more than $1 billion, and then we'll be celebrating the country. We have kinky parties and all of that.
Exactly.
Yeah,
Someone would say the hits occurred during the COVID period, and it began when we started spending without budgetary allocations. There were no limitations to how much we can spend. Our debt management became quite faulty. We missed a lot of our debt timelines, and the pressure became mounted on the government, previous government, and we saw the state moving from CAA1 to CAA2 to as low as CA, and that was the key issue based on our tendency to go into international market. That's when we had a red flag, mean we can no longer operate on the Eurobond market. And that was a very bad precedent that we had then. But it's interesting to note that that's not just the only case, but there are issues that came back to haunt us. And this is, before we get to the S&P, this is Moody's, and this is S&P. Okay.
Exactly.
So what difference does this give, especially based on what we've seen so far?
Okay, so the rating agencies, and these are the top three. So these are the ones that everyone looks out for when they are trying to invest in a country. So these rating agencies tell people or tell investors that, okay, based on certain factors, this country or this lender is more likely to pay back the debts after they take it from you. So if you take money from, say, Ghana, if S&P says we're in a good position, we can pay back our debt, then investors will now buy our debt, give us money, and then we can use that for our projects. So the Eurobond market. When we go to the Eurobond market, investors want to know, is Ghana stable? Would they pay me back my money? And if S&P, Moody's, and Fitch says yes, then investors will buy your bonds. But then if, like we are now, we're in the low part, we are selective default with S&Ps, even though we are now at CCC+, which is vulnerable, the other rating agencies have not risen us back to the level we were. So even if we want to go back to the Eurobond market today, it will be difficult for us to get investors back, because looking at from the key rating agencies, they still don't have trust in the Ghanaian system.
You realize that over the years, anytime we get success in the Eurobond road shows, we tend to celebrate due to how much we've been able to raise from the international market, which somehow becomes an antidote to when the cedi starts misbehaving, including the gold, cocoa-related loans, which normally syndicated loans. And all these monies make us have ad hoc experiences with our cedi stability. So seasonally, we can project that this is how the cedi is going to behave. But for quite some time now, based on our inability to have access to the international market, we are meant to face the hard whip, which is to see the real triggers of the cedi. So right now, we are seeing the real triggers of the cedi. Although there has not been consistent business activity, or let's say a high-based fiscal capital-related expenditures by the current government, we have seen some key movers based on policies. But we'll kind of experience more when the central bank begin embarking or paying some debt-related high debt ratings, which will come there very soon, because there are time lapses for us to comply with based on the MOU we signed. Another indication that came quite well for us is the MOU signed with bilateral creditors in the first month of January of this new government, and that reduced the debt pressure on the government. This was something that S&P identified as a very good indicator to investors, and that also trickled down to how government is managing the current cedi space.
Yeah, and you made a very interesting point. So if you look at the inflation, the cedi depreciation graph, you see that before 2022, when we had access to the capital markets, our exchange rate was very stable, and we saw that last week. It was very stable before 2022. Then after the crisis, after we were logged out of the markets, then our exchange rate started fluctuating, went high as 14 cedis to $1, then started fluctuating. This is because we did not have enough cedi enough dollars to back the cedi anymore. Because prior to that, almost every year, we used to go to the Eurobond market, and then we'll come back with so much dollars in the country that supports our cedi. We have a cocoa syndicator loan as well to support the cedi. But then since then, we've not had access to these dollars. And now, like you said, we have to fall back on different resources to shore up the cedi, and one is gold, which we are now seeing more than $2.3 billion worth of gold exported in just the first 2 months of the year from the Bank of Ghana. And aside that, we have remittances as well, and then crude oil bringing in dollars into the country. So at the moment now, we are not relying on the Eurobond market to help our economy anymore. And even though we are effectively locked out of the markets because of our low credit ratings, I don't think we are going back there anytime soon, because like we indicated earlier, the Fitch, Moody's, and S&P, they are not in line with our rating yet. So investors still don't have enough confidence that if they give Ghana money, they'll pay them back.
I recall when the former president, Akufo-Addo, made mention of the fact that we need an African rating agency. Yeah. And when the rating agency conversation, I was at some of their meetings, and you could see the apathy towards we having our own diagnosis. And my key question was, what are the diagnoses, what are the indicators or factors are they going to consider, considering the fact that most African countries have different economic dynamics. The Ghana's economic dynamics is different from Nigeria's, different from Cote d'Ivoire, and also the key movers and shakers of every economy are quite different. So if Ghana and other African countries are not going to use the same standard to ensure the ratings go hand in hand, that would have been the key issue. But coming back to the real reality, one thing that the previous government, which I recall, Ken Ofori-Atta, the former finance minister, said, which I can't always forget, is we are turning the corner. Well, that is when we had those positive indicators in that has to do. Okay, with regard to the previous slides, we were able to get that very important narrative. So we are turning the corner, and that basically, yes, this was when we experienced the upgrade in 2024. So we saw him say we are turning the corner, and those indicators are positive for us. But turning the corner does not necessarily have to do with what we are seeing now. It's about the opportunity to decide. We saw the current government's budget, which tells you they are not more focused on tax increases, but rather cutting down tax elements and focusing on expenditure reforms and critical fiscal management, all from that angle. And that was something surprisingly S&P noted during the assessment. And they believe that with that direction and also the current government's approach to expenditure, there is going to be much. And that was an opportunity that the previous government had before they decided to go on strong on increasing taxes, strong on introducing new reforms. We saw during those periods when the e-levy came to light, the betting tax came to light. However, the political risks became high to the previous government, and that was something that was considered previously then.
So if you read the reports by S&Ps, it's very evident, to balance your budget, your expenditure and your revenue need to match. And if you cannot get revenue from your taxes, if there's a deficit, it means you have to balance that deficit out with external funding. You have to borrow, either from your treasury bill markets, your local bond markets, or external markets like the World Bank or the Eurobond market. Now, if you are cut off out of the external markets, you're dealing with two factors, your revenue and your expenditure. So you have to cut one. Either you cut your revenue down or you cut your expenditure down. And because of the IMF at our backs and the kind of austerity measures that we are facing right now, you have to cut down your expenditure, which S&P said is looking in the right direction, that the government is sticking to fiscal rules. They recently launched that they are forming a Fiscal Council. There's also a debt rule now. And so all of that means that we are trying to rein in our revenues, which is good news, which means that you're not going to shoot up your expenditure anymore, which needs external financing.
I like the part where you mentioned the Fiscal Council. That was a critical demand by the IEA, that's Institute of Economic Affairs, Dr. John Kwachi, who kept saying the Fiscal Council will help basically manage the debt, will ensure the debt limits by the government are controlled. And that conversation came to light previously, but considering seeing this current government making it a key priority conversation and probably seeing how it's going to roll out is something we are yet to see. Whether the Fiscal Council will be independent.
Now let's come to that.
It's a very key issue.
Exactly.
If the Fiscal Council is not basically controlled by the central bank, but just independent in terms of how they are managing, making sure that flouting most regulations or directives will amount to people being persecuted for embarking on debt, on unrelated activities, that will be against our outlook generally.
It's very important because you can always have the policies and the laws, but then if it's not effective, so for the Fiscal Council, if they are not truly independent, then there's no need in forming the Fiscal Council. But they're just going to rubber stamp whatever the government wants to do, which is not the aim of the Fiscal Council. They need to be independent. And then, like you rightly put, the rating agencies are watching this. So if they see that the Fiscal Council is not performing this function, they will include that in its reports on the country. And investors will be aware that even though there's a Fiscal Council, their authority is not being adhered to, which might be a problem for us.
Over the years, one thing that is very prevalent of our economy, especially expenditure, we annually see the average expenditure growth consistently ranging around 28% annually. This current government has projected to ensure the expenditure growth falls between 9.2% to 10% annually. And that's possibly due to the Public Financial Management Act, which they intend to ensure strong compliance. And from the, if you observe the body language of the current finance minister, he's very strong on ensuring SOEs, key government institutions, operate on limited budget and ensure they prioritize internally generated funds. He gave the direction in terms to the Cocoa Board. They said, we don't have money. They said, go get the money. Many state institutions, he gave them the instruction, go find your money, because he intends to ensure that fiscal measures are prudently followed. And that will come with key compliance, meaning that any institution who you know you owe taxes, the Ghana Revenue Authority, by instructive, already the governing board has been inaugurated. There's going to be strong work from that angle. But we have seen a very instructive things that were considered before this upgrade. Caleb.
So according to S&Ps,
these
are the four main factors that they considered before they decided to upgrade Ghana from selective default to vulnerable. And the first one was a successful debt restructuring agreement. Last year we had restructuring agreements with the local markets with almost 100% participation rates. And then at the end of last year as well, we also had agreements with our external creditors to restructure our Eurobonds. And earlier this year, the memorandum was signed. And so after seeing all these indicators that, okay, our local markets has been done, our external bond markets has also been restructured, it means that moving forward, our debt is more sustainable now. We've reduced it a bit and it's more sustainable. But that comes with some caveats. It means that you have to be paying them. So they also noted that a surge in gold exports.
Before we come to the surge, in terms of successful debt restructuring, from the outlook from the top, we can see that government, the DDEP has worked. There are still negotiations with external Eurobond, which you made mention. But if you come down to the banking sector, we realize some signals. That is, the non-performing loans outlook has been increasing strongly from 20.8% to 21.3% in just 2024. And that has been a key issue from the sector, telling you that the banking sector, although the recapitalization that occurred in 2023 has been successful, which gives us access to huge amount of liquidity, still the risk of credit is still high. And that, as to how the sector will resolve it based on the outlook on the country, is a key issue. And I believe the sector has to sit up and ensure a lot of work is done to increase the access. It can also mean that the rate of inflation has made it impossible for people to pay back debt because the purchasing powers have reduced, business profitability has reduced, and that is a key concern for a lot of business and investors. Although we have this outlook, it tells you that domestically things are not really trickling down or are improving the lives of the individuals.
And that's right, and that's very important, the point you made, that sometimes you can, in your business, you can forecast that, okay, if I make 100 cedis investments, in 6 months' time, I should have it back. But then when you take the 100 cedis, in a few weeks' time, the purchasing power of that 100 cedis is gone. And you cannot invest that same 100 cedis, you need 200 cedis. And once you don't get it, you cannot grow your business, get revenue, and go and pay back the loan. So that's also a problem that policymakers need to look at, especially the banking sector and the Bank of Ghana regulation.
Let's also highlight what happened during the DDEP, the onset of protests, the implications of the DDEP, the burden sharing conversation that were raised, where we saw the pensioners coming on the street. We saw people losing a huge chunk of their investment that was spread over the years. And that conversation came to light. And although the government admitted that the trickle-down impact of the DDEP were not something that were quite anticipated, but it felt very badly for individuals, people losing huge amounts of their profits to most of these government-related decisions. Now we are seeing the ALU looking good, but it came at a very expensive cost to not just the nation, but to individuals as well. The gold, it looks good. Just yesterday, we saw the price going up. What does this mean for us?
We produce a lot of gold in Ghana here.
Yeah.
And the price of gold has gone up astronomically over the past year. Last year was about 1,500 averagely per ounce. Now it's $3,000 per ounce. More than $3,000 actually.
We should get into gold business. We should get into gold business. Because we are gold coast, so we have to coast ourselves.
Exactly. Yeah. So, and also with the formation of the gold board now, even though they are not fully operational yet, when they become operational, all gold from the small scale mining sector will now be in control by their government. And then when they export the gold, the entire dollars stays within the country, which is good news for us. And also because the price of gold is going up. Whenever we export gold, even if we are exporting about half of what we exported last year, we are still making more money. And which is why in the first 2 months of this year, January and February, we exported about $2.4 billion worth of gold, which is good news for us. It means more revenue coming into the country. And this is why S&P also upgraded us, because we are getting more revenue into the country, which means that we should be able to pay back our debts whenever they mature, which is good news for us again.
Yeah. The gold board conversation, although it's not fully institutionalized, is giving just a signal. The signal in commodities market is very important. Every element is considered in projections, in price setting, in anticipation of the next move. That is done daily by market analysts. So yes, the gold earnings looks good for us. We've seen increase, but another conversation that came to light is the asset ownership in our gold conversation. Not just gold, but our natural resource like lithium and a lot, bauxite, and all of them came to light. Although we've seen the surge in gold earnings, the galamsey activities keep increasing. The institutionalization of small-scale mining also comes to light, whether our environmental-related sectors isn't something that has been prioritized. The gold board is there, intends to buy gold from domestic gold miners, but the environmental impact analysis of these key areas, how is the gold board going to manage it? Which institution? Is it going to be the Environmental Protection Agency?
EPA, yeah.
If the EPA has been there, are they being supported with the right funding? Are there allocations enough for them to have people moving to the forest areas, looking at the vast forest reserves that have been destroyed?
Exactly.
Forest restoration cost, our carbon deficit, which we would have sold to get enough money with the international market, because carbon voting is something that is expensive now. So all these are things that we could have earned enough if we had worked with policy, we have worked with research, we have worked with collaboration with key national institutions instead of allowing things to just be as they were. So yes, the gold is there. Now, before even the gold, we know the gold is helping. Our strong remittances from the central bank is also helping, which I'm sure you want to share something to that.
So even last year, we got about $6 billion from the remittance space.
Yes.
And the first months of this year, we don't have the figure yet, but last week when we spoke to the head of financial stability at the Bank of Ghana, he said remittances this year have been phenomenal, which is also why the cedi is performing better against the dollar and other major currencies around the world. So the remittance space is so good. And I want to point you to an interesting part. You said that because of the price of gold is going up, illegal miners are now incentivized, because if you get small gold, you get more money. So that space has to be very sanitized to prevent the spillover effects we get from the galamsey and illegal mining conversations.
I'm sure viewers watched today's news, that is the Joy News today at 12 p.m. And one thing that came to light is what the gold board put to the public that some foreigners were arrested trying to take gold out of the country. And it shows you how deep-seated the case of smuggling has become. So it's good to see the BNI and also the key security institutions down on the ground trying to bring out some of the leakages in the whole gold value chain. Yeah. So it is good. We hope that when gold becomes institutionalized, the case of corruption and hidden cartelization of the sector will not be an issue going forward. And because if there's no transparency in a very strategic sector, which is high profit earning, trust me, although we'll be taking the numbers, we will not see it reflecting in the books because of how it will be managed. Strong economic growth outlook in the first quarter of 2024. Due to what is happening here, we are experiencing what is looking here, and that is very interesting there.
And that's a problem too. It means that if the price of gold goes down, it will be hit very hard. Because even though gold is going up these days because of what's happening on the international markets, Trump and his trade policies, it might settle down next year or later this year. And if that does, either the price of gold will stabilize or start dropping marginally. And when that happens, we might be hit. So even though we are celebrating the success of the gold price, we should put in place mechanisms to protect us in case gold prices should fall, because gold is volatile. It can go up, it can come down.
There's been calls for us to put in place a shock absorber, economic shock absorbers. For instance, we have to have some funds. I forgot the name of that particular fund.
Sovereign wealth?
Exactly.
Sovereign wealth fund.
Exactly. Those funds were able to ensure the shocks in terms of dollar being stronger,
and that's what the gold reserve is trying to do now, because we are now having a huge reserve of gold. So if there's any shocks that might take us into a recession or something, we can sell the gold and then support the currency and support the economy. So we have some kind of buffer, but we need to increase that.
The buffer, let's hope it will be something that the central bank will. But some key figures I'm listening or getting to here within the financial sector is that the central bank looks like they have a very strong strategy. But the unfolding of this strategy will be tested with time. Let's see how they intend to roll out, because the new central bank, new policy, new structures, because if you look at how he's managing the Forex outflow, is interesting. There is injection of about $290 million into the market, and that has given some respite in terms of pressure on the currency, and that is quite okay going forward. And this, according to from the strong economic growth outlook, the economy looks good, but the trickle-down impact, I always want to relate it to whether we are feeling it.
Exactly.
The next topic we will likely be touching is, although we've seen the transport, we've seen CD appreciating.
Oil prices come down.
Exactly. Are we supposed to get that rate of reduction? Why are fares not going up? If transport fares goes down, automatically your expenditure level also comes down.
Get savings.
Exactly. You get to save more. But we're not able to save more. The money comes, the money goes. It flies away like
exactly.
So the evaporation of our currency in our pocket is a very key concern. Yes, so the economic looks good based on key strategic sectors like the gold sector, the mining and quarrying sector, the industry sector has also been growing. The producer price inflation has also been going up because the general price of raw materials keep increasing as well. Now, the IMF-backed fiscal reforms, how has it helped us so far in London?
For investors, once they know that the IMF is watching us, they know that we'll not have any. So if you can go to the next slide, they know that we'll not have any fiscal slippages or any problem with our finances, which is good for us. So because they see that the IMF is watching us and making sure that we don't overspend or get ourselves into funny situations, there's more confidence that we'll be able to pay back our debt.
We saw recently the president himself during a conversation in one of the African countries, and especially Abidjan. He was speaking at the CEO African budget. He says rising public debt levels, inability to refinance maturing debt, all these concerns is something this government is putting in place to restructure. So if you're watching Beyond the Numbers today, the conversation has been the key ratings that has come. What are the things we should consider? We're hoping that based on this outlook, the analysis that was done today, you're able to understand the way forward as a government, what we have to put in place in terms of structure, in terms of projection, the key decisions that have to boldly be made to ensure we have sustainable, reflective, poverty eradicating growth is something that will be a key priority. Caleb?
Yeah, so I think we just have to sustain this. If the other rating agencies start to upgrade us, it's good news for us.
Thank you for watching today's edition of Beyond the Numbers. We'll come your way same time on Friday at 5:30 p.m. My name is Winston Taki, and I did choose show with one dynamic analyst himself.
Caleb Ziblim.
Thank you for watching. We'll see you same time Friday. Have a wonderful business day. Bye-bye.